Welcome to the Deep Dive. Today we're diving deep into a topic that, well, it underpins almost every financial interaction you have, yet it's often sort of invisible. The global payments industry. Forget niche. This is a multi-trillion-dollar cornerstone of the modern economy, and it's undergoing a profound, really rapid transformation right now.
Absolutely.
Our mission today is to, cut through the noise, extracting the most important nuggets of knowledge from the sources you've shared, articles, research, notes, to give you a shortcut to truly understanding this indispensable, intricate, and fast-moving landscape.
Yeah, it's moving incredibly fast.
We're going to unpack everything from the pervasive influence of AI and the lightning speed of real-time systems to, well, the strategic emergence of central bank digital currencies.
Right.
Get ready for some surprising facts and hopefully a much clearer picture of how value truly moves around the world.
And that clarity is absolutely paramount. I mean, for anyone making strategic decisions or looking to capitalize on significant growth opportunities, grasping these dynamics isn't just helpful, it's critical.
Right.
The industry's current trajectory points towards a future defined by, well, accelerated transaction speeds and increasingly seamless integration across pretty much all platforms. It's a truly fascinating space to explore. New developments popping up constantly.
Okay, let's unpack this then. When we talk about global payment solutions, it sounds incredibly complex. What are we actually talking about at their core? What problem are they trying to solve?
Yeah, it sounds daunting, doesn't it? But at their core, these are sophisticated systems designed to simplify what would otherwise be, frankly, incredibly convoluted operations.
Like juggling lots of things at once.
Exactly. Think about it. Moving money across borders means juggling multiple banking relationships, dealing with diverse currencies, and adhering to just a myriad of different regulations.
Okay.
The fundamental problem they solve is transforming this global financial spaghetti into a single, seamless flow. Their core functions go beyond just moving money. They include processing international payments, performing precise currency conversions.
Which is crucial.
It's absolutely crucial, supporting an enormous range of local payment methods because people pay differently everywhere, right?
All right.
And rigorously managing security and compliance. The essential components, well, you've got payment gateways. Think of them like digital security checkpoints.
Okay, like at an airport.
Sort of, yeah. Ensuring payment details are securely passed. Then you have the backbone. Financial institutions, mainly banks, and specialized payment processors that validate and orchestrate the whole thing.
And how does it actually work, step by step? Right.
Sure. It's a multi-stage dance, really. Starts with initiation, you click pair, moves to authorization security checks, then transaction processing, that crucial currency conversion step if needed, and finally, settlement, the money lands.
Right.
And woven through all of this are the fundamental pillars. Regulatory compliance, like GDPR in Europe, and robust security. These aren't just features, they're non-negotiable foundations.
So that's the hidden complexity. But what does this all mean for you, the listener? Whether you're a business owner selling overseas or maybe just sending money to family abroad, what are the tangible benefits we see?
Oh, the advantages are profound and often, like you said, invisible. First, they dramatically simplify cross-border operations. Imagine trying to manage dozens of bank accounts, different rules. These systems consolidate that nightmare.
Cuts down on headaches, I bet.
Big time. Slashes overhead, errors, and lets businesses scale globally. Second, they supercharge cash flow. Faster settlement, automated currency conversions mean more predictability, less risk from exchange rate swings.
Okay, that makes sense.
Third, they act as an invisible shield. Advanced tools, automated features boost fraud prevention and compliance. That's huge in high-risk international dealings. Fourth, they're intelligence platforms.
How so?
They give businesses actionable data where customers are, how they prefer to pay, what drives sales, really helps refine strategy. And finally, inherent scalability. They grow with the business.
Right.
But what's truly brilliant, and maybe a bit concerning, is how this underlying complexity is almost completely concealed. That simplicity is the value prop, right?
You just want it to work.
Exactly. But it can foster a reduced understanding of the vulnerabilities. It puts a huge burden on providers to keep things resilient without the user even realizing the intricate dance happening behind the curtain.
So we know what they are and why they're so important.
Yeah.
Now let's dig into the sheer variety out there. It's a pretty diverse landscape, isn't it?
It absolutely is. And it's constantly evolving, which keeps things interesting. For example, you have payment gateways, like we mentioned, Critical digital interfaces, essential for e-commerce, accepting cards, wallets, local options.
Usual suspects.
Pretty much. Then we have cross-border payment platforms specifically built for the international stuff, currency conversion, compliance, all that.
Got it.
Beyond those, digital wallets. Think PayPal, Apple Pay. Huge convenience, secure storage, quick purchases, especially on mobile.
Very.
Hugely. But, international bank transfers, wire services, SWIFT, SEPA, they're still incredibly reliable, especially for larger sums or traditional preferences. They haven't gone away.
Right, still a place for them.
Definitely. And what's really exploding is alternative payment methods, APMs.
Yeah.
This is a rapidly expanding category. Buy now, pay later, local mobile pay systems that dominate in certain countries, even crypto payments are creeping in. It's all driven by consumer preference.
Interesting. Anything else?
Yes, multi-currency accounts. These are a game changer for businesses operating internationally. Hold, manage, convert multiple currencies without needing separate bank accounts everywhere. Saves a fortune on conversion fees.
Okay, so here's where it gets really interesting, I think. This isn't just about having different options lined up. It feels like a more fundamental shift is happening. How is consumer convenience actually changing the definition of what's a valid or preferred way to pay?
That's spot on. A key takeaway here is this undeniable trend. We're moving away from a purely bank-centric world. It's shifting towards this proliferation of digital, mobile, and alternative methods.
Driven by us, the consumers.
Absolutely. Demand for speed, sheer convenience, novel features. It's compelling the industry to innovate like mad. This isn't just banks adding services. It's a genuine rebalancing of power.
Power shifting away from
From the traditional institutions towards, agile fintech innovators and, crucially, towards consumers themselves. But this diversification, it creates real challenges for merchants and providers.
Like what?
Integrating all these different systems, ensuring compliance is consistent everywhere, managing fraud across multiple channels, it's tough. And if you think bigger picture, financial inclusion isn't just about having a bank account anymore.
Right.
It's increasingly about having access to and knowing how to use these diverse digital payment channels. So yeah, gateways are key for e-commerce, wallets for mobile users, multi-currency accounts for businesses. They all point to this consumer-driven revolution.
This whole system, it really does sound incredibly complex. So many moving parts, so many players. Who are the key stakeholders in this intricate web that actually make a single transaction possible? Can't just be a couple of banks, right?
Oh, absolutely not. No single entity operates in isolation. It's like a deeply interdependent network, a digital orchestra, you could say.
Okay, who's in the orchestra?
Well, first, the customer initiates the payment, and their preferences drive all this innovation we're talking about. Then, the merchant accepting the payment, needing robust infrastructure, the payment method itself, the card, wallet, crypto,
Right.
the point of sale, POS system where it happens, physically or online, then the payment gateway, securely transmitting the data. From there, the payment processor handles the technical stuff, validates, routes things between parties.
Okay, so that's the tech side, then the banks.
Exactly. You've got the acquiring bank, holds the merchant's account, receives the payment, settles funds, and the issuing bank provides your card or account, authorizes or declines the payment.
Got it. Acquirer for the merchant, issuer for the customer.
Precisely. And overseeing a lot of card stuff are the card networks or schemes. Think Visa, MasterCard, American Express. They're the central highways, routing data, setting rules, managing fees. Interesting side note, Amex is often a closed-loop system. They're both issuer and acquirer.
Okay. Anyone else?
Yes, crucially, payment service providers, PSPS. These guys simplify electronic processing for merchants, often bundle multiple methods, fraud detection, currency conversion into one platform. Very important.
Makes life easier for businesses.
Definitely. And then, of course, the regulatory bodies. CFPB, FinCEN in the US, PSD2, GDPR in Europe, setting rules for stability protection, preventing crime. And finally, don't forget the technology providers building the software, hardware, cybersecurity that makes it all tick.
Wow, okay. That is a complex web. So what does this all mean for the power dynamics in the industry? I've read some things suggesting this complexity might lead to more fragmentation or maybe even concentrate power in new ways. How has this changed over time?
That's a really great observation, and it hits on a critical tension. Historically, yeah, traditional banks dominated, pretty much unchallenged.
Right, they held all the cards, so to speak.
Literally. But the rise of these agile fintech companies, PSPs, APM developers, has introduced entirely new competition. But it's not just straightforward competition. Often, it's collaboration.
How does that work?
Well, these new players often partner with banks using their infrastructure, their licenses, while pushing the innovation envelope. So it's led to a rebalancing of influence. Power isn't just about who holds the money anymore.
That's about.
It's increasingly about who understands and leverages the data generated by its movement. So while fragmentation can be a challenge, this whole dynamic ecosystem is collectively driving towards greater speed, security, customer experience. It forces everyone to adapt.
It's easy to take modern payments for granted, isn't it? Almost like magic. Swipe a card, tap a phone, money moves. But how did we actually get here? Can we trace that journey? Not just dates, but the key shifts.
Yeah, it's a fascinating journey, and it really shows this relentless human drive for more efficient, more trusted ways to exchange value. We started with barter, obviously, but the real evolution kicked off with things like commodity money, then metal coins thousands of years ago, standardized things,
Made trade easier.
much easier, then the brilliant invention of paper money in Tang Dynasty China portability, followed by banknotes in 17th century Europe. Checks popped up early around 8 or 6 CE, but really became common in the 18th century, another layer of convenience.
Okay, so physical representations of value. When did electronics come in?
The truly pivotal shift for our modern world was electronic funds transfer, EFT, in the 1870s. Western Union using telegraphs to send money. Imagine that.
Wow, money by wire, literally.
Exactly. By 1910, even the Federal Reserve was using telegraphs. Then the mid-20th century brought plastic. Credit cards, Diners Club in 1950, then Amex, Bank of America, and debit cards in the 70s.
And those cards changed rapidly too, right?
Oh, yeah. From magnetic stripes in 69 to RFID, secure chips, tokenization, contactless payments by the 90s. That era also saw widespread ATMs from 67 and electronic data interchange, EDI, changing business-to-business transactions. And of course, the 90s brought online banking.
And then the internet really took off in the 2000s.
And the digital revolution just exploded. PayPal launched in 98, fundamentally changed online payments, especially after eBay bought them.
Wow.
E-commerce growth, like Amazon Mobile in 2001, just fueled it. Dedicated payment gateways like Braintree, Stripe, Square emerged, simplifying things for merchants.
And more recently, the last decade or so.
Just an absolute whirlwind. Escrow services, one-click payments, e-wallets became mainstream. Then the really big shifts. Cryptocurrencies and blockchain in the 2020s promising decentralization, AI transforming fraud detection, biometric authentication for security, and critically, real-time payments becoming the norm alongside this idea of invisible payments transactions happening automatically. It's been quite the ride.
The past is absolutely fascinating, but let's shift to right now. What's happening on the ground and what's looking likely for 2024, 2025? What are the biggest forces really shaping the payments industry today?
We're definitely in a period of intense transformation, a real inflection point. The first major force, hugely accelerated by recent global events, is pervasive digitalization.
Everyone's online.
Pretty much. Nearly 9 in 10 American consumers use digital payments now. It's not just adoption, it's rethinking the whole ecosystem for high-speed, digital-first experiences. This leads straight to the rise of instant payments.
Faster's better.
Not just fast or immediate, 24/7 fund availability. It's a top priority for businesses. Something like 73% of mid-sized U.S. businesses are using RTP or FedNow, the Fed's instant payment service. Improves cash flow, reduces fraud risk, lowers fees for merchants compared to cards sometimes.
Okay, instant payments is big. What else?
Building on that, open banking and interoperability. Secure data sharing via APIs, unlocking financial data to tailor products, boost loyalty, improve efficiency. Open banking payments are projected to hit, $330 billion globally by 2027? Huge potential.
And something that affects us directly as consumers.
Embedded finance. This is booming. Integrating financial products right into apps and websites we already use. Think financing options at checkout, insurance in a travel app. Seamless integration, projected $2.5 trillion global transaction value by 2028.
Wow.
And what's truly transformative underpinning a lot of this is AI and machine learning. Automating processes, massively enhancing fraud detection, real-time anomaly checks, behavioral biometrics, personalizing experiences. AI is even automating back-end stuff like invoicing, scheduling, reconciliation, optimizing cross-border routes. The generative AI market in payments alone, expected $13.3 billion by 2033.
AI is everywhere.
It really is. This also fuels the continued growth of alternative payment methods, APMs, wallets, BNPL, account-to-account payments, reflects shifting preferences. And finally, neobanks and disruptive models. These agile, digital-first banks are seriously challenging the traditional players. That market's set to grow from about $96 billion in 2023 to over $2 trillion by 2030. It's a seismic shift.
It really sounds like a consistent theme across all these trends is just this relentless pursuit of speed, security, and maybe above all, customer experience.
Couldn't agree more. That trio is driving almost everything.
Now, we keep hearing about digital currencies, central bank digital currency, or CBDC. Is that just like Bitcoin? What exactly are they, and why are central banks all over the world looking into them so seriously?
Yeah, that's a crucial distinction, and it gets mixed up all the time. A CBDC is fundamentally different from Bitcoin. It's defined as a digital liability of a central bank that is widely available to the general public.
So backed by the government, unlike Bitcoin.
Exactly. Backed by the central bank, just like physical cash. Bitcoin is decentralized, unregulated, no government backing. The main goal isn't necessarily to replace cash overnight, but to modernize money movement while keeping government oversight and the stability of central bank money.
Why now, though?
Several reasons. To stay relevant as payments go digital, to counter the rise of private digital currencies and stablecoins, and to preserve the benefits of central bank money if cash use declines. There's also a geopolitical angle, potential for faster, cheaper payments, especially cross-border, and maybe enhancing financial inclusion.
Financial inclusion. How?
Well, in theory, you might only need a phone and a digital wallet, not a traditional bank account, which could help underserved populations.
Where are we seeing progress?
China's digital yuan pilot is quite advanced, significantly expanded. In the US, we have FedNow for real-time payments, but that's not a CBDC. An actual U.S. CBDC. That would take years of investment, testing, public debate.
What would the impacts be if they did become widespread?
Potentially faster cross-border transfers by cutting out middlemen, maybe lower fees for remittances, increased transparency and traceability with built-in compliance.
But that raises privacy flags, right? The digital trail.
Huge ones. That's a major concern. They could also pressure traditional banks competing for deposits. But again, maybe greater access for the underserved. The challenges, though, are substantial.
Such as?
Immense IT investment, massive cybersecurity risks, those critical privacy issues, potentially slow adoption, that chicken and egg problem. Plus, big economic implications for financial stability need very careful thought. It's not a simple switch.
All this innovation, this transformation, it sounds incredible, but it must operate within rules. The global payments industry navigates this incredibly complex web of regulations to keep things stable, secure, fair. How do they even manage that?
Yeah, this is where the regulatory bodies come in. And you're right, it's maybe the most complex part of the whole ecosystem. Key global standards include PCI DSS, that's for handling your credit card info securely, and EMV, the chip and pin tech.
Okay, the card security stuff.
Right. Then you have AML, anti-money laundering, and KYC, know your customer frameworks. These are global, enforced by bodies like FinCEN in the US or FinTrack in Canada. They mandate customer ID checks, risk assessment, reporting suspicious activity, all to prevent financial crime. KYC is about verifying who you are.
And regionally, Europe seems to have strong rules.
Very much so. You've got GDPR, the big data protection regulation giving people control over their data, and PSD2, which aims to boost competition, innovation, and security in payments. PSD2 mandates strong customer authentication, SCA, for many online transactions, enables open banking APIs, and has strict liability rules. It intersects heavily with GDPR.
And the UK?
The UK has its PSR, largely aligning with PSD2 post-Brexit, overseen by the FCA. What's really interesting is the US payment regulations scene.
How so? Fragmented.
Extremely. Instead of one main body, it's a patchwork. You've got the Fed, CFPB for consumer protection, OCC for banks, FinCM for financial crime, FDIC for deposit insurance, NANESE for ACH rules, plus state licensing.
Yeah.
Very different from Europe's more unified approach like PSD2.
So compliance must be a nightmare.
It's a significant challenge. The complexity, the fragmentation, constantly evolving rules, and balancing data privacy like GDPR with fraud prevention like PSD2 can create real tensions. Cross-border data transfers are tricky too. Robust onboarding and continuous monitoring are essential.
What's the future look like for regulation? More rules?
Modernization, mainly. We expect PSD3 in Europe to tighten controls on things like embedded finance and digital wallets. Crypto and stablecoin regulation is definitely advancing globally. Regulators want more AI transparency and compliance, and more international coordination on digital ID for real-time cross-border payments is likely. It's moving towards more dynamic, tech-enabled compliance.
So we've talked about all this incredible innovation, the complex rules governing it. What are the big hurdles still facing the industry? And flip side, where are the most exciting opportunities for innovation and growth right now?
Well, what's fascinating is that the biggest challenges are almost always where the biggest opportunities lie. Take security and fraud risks. They're definitely heightened with digitalization.
More ways for things to go wrong.
Exactly. Sophisticated scams like business email compromise, account takeovers, AI-powered fraud, and instant payments. Great for users, but also attractive to fraudsters because the money moves so fast. Crypto has its own volatility and hacking risks, too.
So the opportunity is.
Massive investment in AI and machine learning for real-time fraud detection, biometrics, tokenization, basically, building better digital defenses. That's a huge growth area.
Okay, what other big challenge opportunities?
Interoperability and fragmentation. Getting all these diverse systems to talk to each other seamlessly is hard. The fragmented U.S. regulation doesn't help. Opportunity. This is where open banking comes in, promoting interoperability. Look at India's UPI, huge success story there.
Fine.
Increases user choice, streamlines things.
Makes sense.
Financial inclusion is another major one. Still billions underserved globally, facing high remittance fees, excluded if they rely on cash or lack digital literacy. Opportunity. Fintech solutions are tackling this head-on. Instant payments for underserved, digital IDs simplifying onboarding, maybe CBDCs offering universal access, super apps increasing account usage. Lots happening there.
What about sending money internationally? Still feels slow and expensive sometimes.
Yeah, absolutely. Cross-border payment complexities. Slow, costly, too many intermediaries. Opportunity. Fintechs are driving efficiency. Distributed ledger technology, DLT, the tech behind blockchain, could revolutionize B2B payments. Global stablecoin initiatives aim to cut complexity. AI can optimize routes. The G20 has a roadmap to improve this by 2027.
And regulation itself can be a hurdle.
Definitely. Regulatory confusion and market disparities. Fragmented global rules create uncertainty, opportunity, fostering greater international cooperation, consistent frameworks for new tech like crypto, using regulatory sandboxes to test innovation safely. The hurdles are real, but the potential payoff for solving them is immense.
It's really clear that beyond these specific areas, the entire industry is just brimming with potential. We're seeing this continuous evolution of payment methods, reflecting a global embrace of speed, security, innovation. You mentioned some staggering numbers earlier.
Yeah, the digital payment market projects it to hit US $32.07 trillion by 2033, driven by internet access, mobile use, e-commerce, financial inclusion.
Right. And emerging tech, AI, ML, blockchain, IoT, they're literally creating new ways to pay, where devices make autonomous payments. It seems collaboration between banks, fintechs, regulators, retailers isn't just nice to have, it's absolutely crucial.
Couldn't agree more. It's essential for navigating this future.
So to try and wrap up our deep dive, the global payments industry is dynamic, indispensable, constantly evolving. We've looked at its core jobs simplifying complex transactions and how speed, security, convenience are driving everything. We've also underscored the huge influence of digitalization, instant payments, AI, and these emerging CBDCs, all operating within that intricate but modernizing regulatory web.
And connecting that to the bigger picture, the economic impact is profound. Digital payments directly boost GDP growth, foster financial inclusion by bringing more people in. While challenges remain security, interoperability, regulation, they really do represent immense opportunities for innovation, collaboration, strategic growth.
So the future is
Intelligent, seamlessly integrated systems, balancing cutting-edge tech with robust oversight, aiming for a secure, efficient, and truly inclusive financial ecosystem for everyone.
That's a perfect summation. And thinking about that future, we touched on the idea of invisible payments earlier.
Yeah.
IoT devices making autonomous payments. As your smart devices, your car, maybe even your fridge, increasingly have the power to pay on their own, how much control are you, the listener, comfortable giving up for that ultimate seamlessness?
Interesting question.
And what new responsibilities does this shift place on the tech providers? Not just for security, but for ensuring true transparency and accountability, even when the payment itself is quite literally invisible to you.